And now for more on this story, we're now joined by correspondent Sidhant. Sibal, Sidhant, good morning. Not a very good news. Rupee again declining to an all-time low.
Seems like the bad news does not seems to stop now. The rupee today touched 61.41 against the dollar. It's an all-time low. Last time it touched the all-time low was on 8th of July, 60.21. Will the trend continue? Possibility is yes, because markets are waiting for some strong action. We have seen RBI taking strong action on 15th of July, tightening the liquidity, but it will impact the other sections, other sectors of the economy. But let's rewind a little. What action the government has taken? Let's rewind to the last month. Last month we saw a number of reforms, the second round of reforms as they are known, for raising the FDI cap in various sectors, including telecom. 100% FDI was allowed, defense, which is a crucial sector, relaxing the norms in multi-brand retail before the starting of August. Basically, the caps were raised so that the investment comes. But is the investment coming? That's the big question, because investors are still jittery, mainly because the fact that they still fear the ease of doing business in the country, and of course the 2014 polls. Many investors are waiting for the 2014 polls, and then they probably might invest. So we can see a lag effect, in a sense, investment coming, but after 6 or 12 months. Remember the first round of reforms, the FDI reforms, which came in last year, didn't saw concrete investment. The only big investment was from IKEA, that too in single brand retail. So and today also there is a general not so good mood of the economy, because today credit rating organization again downgraded India's growth prospect in the current financial year. We've already seen RBI downgrading India's growth, the GDP number for the current financial year, from 5.7 to 5.8. The government itself is pegging around 5% for this current fiscal year. Last fiscal year we saw India's GDP growth tanking for almost a decade low of 5%. So a general not so good mood about the economy, and just people, there's an uncertainty, and that is leading to all kinds of I would say negative things, including rupee going for a free fall, the markets tanking. The markets are around 200 points down. The Sensex is 200 points down. The Nifty is 70 points down.
Right, Sidhant, not a very good news. Sensex is, of course, continuing to tumble for the 8th consecutive session. It's down by over 200 points. But really, what measures can the government take here? You know, last week, as you mentioned, the government had announced liberalization of FDI reforms, but investors are still jittery.
Yeah, the measures are only to get investment. Investment is the only solution. Of course, it's not the panacea, but other things could be more structural in a sense. Infrastructure, India needs investment in infrastructure. The 12th five-year plan pegs around $1 trillion investment in infrastructure. But these are long-term perspectives. These are not short-term in a sense. FDI is medium-term. Medium term I'm saying because the investment is not just going to come tomorrow, day after tomorrow, next month, probably 6 months. The only measure is that the government should go for short term measures, like including that which the RBI can do, that is increasing the change of interest rates. 30th of last month we saw RBI coming with this monetary policy, and that was to save the rupee itself, and the central bank's main aim right now is saving the rupee, which will obviously impact the industry, because liquidity tightening measures have been issued by the RBI. And previously we saw that Reserve Bank's main aim was the dilemma between inflation versus the growth thing. Now its main one-point single agenda is to save rupee, and in saving the rupee, it just might hurt the industry.
All right, Sidhant, Sibal, thank you very much for joining us.